question. So Mansa X reported a 5% 3-month return. That is for the Q3 of 2025. But as you can see here, some investors reported that they got a negative statement, or rather, the value of their account was less than what they invested from the same fund, that is Mansa X. Disclaimer here. This was for the people who invested recently, or people who invested in that last quarter, or people who topped up in that last quarter, okay? So for those who have been in the fund for a while or for more than a quarter, please don't get alarmed. This was for new investors who actually invested towards the end of that particular quarter or topped up towards the end of that particular quarter. So the question is, what really happened? How was that even possible? Was it an error, or how is this how the fund actually works? If you saw a negative return, or you saw a lower return than what was expected or what was declared, or you're just curious to know how this happened, or you want to invest, you knew you want to invest, make sure that you stick around, because I'm going to explain how this is possible. And as usual, I am an educator, and as an educator, I talk about the good, the bad, and the ugly, so that you make an informed decision when it comes to investment. And today, we are diving deep. We are going to look at the wins, the risk, and the why behind it all, and how this fund fits into your larger portfolio of investment. And by the end of this video, you'll know whether you want to invest or not, or whether you want to top up into Mansa X or not. Welcome to Study of Wealth. Here we walk through this journey together, and together we analyze investment opportunities to grow our money. My name is Susan Juguna, and you can join me in this journey to financial freedom by subscribing to this channel. Now, let us break this down. I love starting with numbers because it is what speaks to us, right? So if you invested at the beginning of the Q3 and you invested 1 million Kenya shillings, you'd be looking at 50,000 Kenya shillings in 3 months as interest of your investment, okay? And these are your real returns. They have already deducted the management fee, and the fund for now is tax exempt. And this is in condition you joined at the beginning of the quarter, or you are already an investor at the beginning of the Q3, okay? Now, allow me to introduce a comparison here so that you appreciate how this fund actually works from the returns point of view. Here is a table to show the fund performance for 2025, and you can see different quarters have different rates of returns. Q1, they achieved a 4.89%. Q2 was the highest, they had a 6.05%, and now Q3, they had a return of 5.09%, okay? Now, I want you to pay attention here in this table. They have not indicated how much you earn per month. And as the numbers for quarterly are different, so are the numbers for monthly returns. Now, these are the returns you get if you invest for a full quarter. The next question we ask ourselves is, how much will you earn if you join the fund in the middle of the quarter or in the last month of the quarter? And that is our focus today, because this is where the difference in returns comes in, and this is the reason why some people made a negative return, and I will walk you through it. I want us to work with an example. So for the fund to report the 5.09%, it can work in so many different ways, right? Maybe the first month they did a 3%. The second month they did a 1%, third month they did a 1%. The possibilities are endless. We can put different numbers here for it to get us to 5.09%. Maybe there was a month they did a negative return. We don't know. The only thing that we know is in 3 months combined, they delivered a 5.09%. True? So let me show you exactly how someone can end up with a negative return even when the fund reported a positive 5.09%. And you're going to use the minimum investment required, that is 250,000 Kenya shillings. And we're assuming we invested this in 1st September. So that is the last month of Q3. Now, I want us to start somewhere, and I want us to start with our gross performance. We assume that the gross performance, that is before fees, over the 3 months was, let's say July, we did a plus 4.2%. In August, we did a plus 2.1%. And in September, we did a plus 0.3%. So that nets to plus 6.7% gross for the full quarter. True. After the full quarter service charges, that is 5% per annum, which is equal to 1.25% for 3 months, and the net is 5.09%, exactly what was reported. So these are the numbers that you're going to work with, okay? So we have seen the gross rate performance and then the net performance after the fees, okay? So the gross performance is 6.7%, and the net performance is now 5.09%, what they reported. Now, you invested 250,000 Kenya shillings on September 1st. You only get September gross returns. That is your 0.3%. That is what you got, all right? But the service charge is 5% per year, prorated on a monthly basis in this case. They prorate daily, but because now we're investing in 1 month, we are going to do it monthly, all right? So that is 0.4167% per month, which is 5 divided by 12, all right? So here is the calculations. So we are starting with 250,000 Kenya shillings. September gross return is 0.3%, which is around 750 Kenya shillings, all right, for the 250,000 Kenya shillings. So the gross value is 250,750 Kenya shillings. Now let us work with the service charge. For 1 month, that is for 250, we are going to get 1,041.75 Kenya shillings. So the final value at the quarter end will be 249,708.25 Kenya shillings. And you can see here, we have a net return of negative 0.12%. Okay? So as you can see, you're going to get a negative 0.12% on your statement, a negative return. The value of your account right now will be less than what you invested, just because the last month of the quarter, they did very low returns as compared to the other months. So even though the fund reported a very good return of 5.09%, it depends on when you got to the fund, okay? That's not an error. That's timing plus fees eating into your tiny gross gain of that 1 month. And this is because your money did not ride the full rally, and the monthly prorated fee wiped out the small upside that you got in your account. This isn't always the case, but it happens, and as you can see in the comment section, there are people who experienced this. And the opposite is also true. The fund can do a 4.2 in the last month of the quarter. So the question is, does this mean it's wise or it's safer to invest at the beginning of the month or the beginning of the quarter as opposed to joining towards the end of the quarter? And I think it's safer. And this goes to the people who are, their risk appetite is low. But if your risk appetite is high, this is a chance that you can take, because at the end of the day, the last month of the quarter can be the one that is making more money. So the answer to this question is determined by whether this is a risk that you'll be willing to take. As for me, I think this is a risk that I will be willing to take. The fact that there is a chance for me to make more money in that last month, then it means that I would invest. And I mean, this is what investments are all about, right? It's about the risk and the potential returns that you're taking from that particular fund. And the beauty of this fund is the fact that it has a 6 months lock-in period, meaning if you invested in the last month of the quarter and you reported a negative return, then it means the next quarter you'll be in the fund for a full quarter. Meaning, if you did a negative return and the next quarter they did like a 5%, you'll still get you still get back your money, the one that you lost, and make more. Okay, so this is something that you need to consider before investing. Assess yourself, find out whether it's a risk that you're willing to take. If it's not, just join the fund. Just wait until it's the beginning of the quarter. Okay, if it is, just create an account and start investing. Now, before we look at the fund structure and the risk and we compare the returns, Do you think it's better to join or top up at the beginning of the quarter, or is it worth risking in case the fund does better in the last month of the quarter? Let me know in the comment section. Now, before we conclude talking about the returns, it's good to note that Mansa X has been there in the market since 2019, and this is how it has performed since inception. Now that is out of the way, let us look at the fund structure and also the fund strategy for those who are new to Mansa X, and for the investors. If you're already an investor, it's always an opportunity for you to learn more about the fund. I know, because I learn about the fund every time I'm making a video. I learn something about this fund, okay? Or maybe I cement my knowledge into the fund. So it's also an opportunity for you to do so. So for those who are new, welcome to this Mansa X video. We're going to elaborate how this fund works for you to understand and to know whether you're willing to invest in Mansa X. So I'm not a financial advisor, I'm a financial educator. So my job here is to just educate you on how this particular fund works. So Mansa X is an investment where you give your money to a fund manager, and in this case, you're giving your money to SIB, Standard Investment Bank. And the fund manager takes the money and invest on our behalf. And here is where they invest your money. Now, what you need to know here is that the fund diversifies your investment across different assets, or they put your money, the money corrected to different investments. And in this case, this is the top 10 holdings where they invest your money for you to make more money. And I want you to note that this is the top 10 holdings, meaning they invest in more than the 10. They actually invest in almost 200 assets. And through this, they're actually able to protect your capital from losing value. But I want you to note that they don't guarantee capital preservation. And some of these assets are very volatile, but the fact that they put money into different assets, they are able to reduce the risk of these investments to a medium risk investment. The other thing that you need to note that is this fund makes money even when there is crisis in the market. And a very good example is what we have seen in the recent, actually in this year, the whole of this year, the tariff issues. And in the last quarter, we saw government shutdowns. Also, it got into this quarter as well. That is the Q4 as well. And this is how it works, how they are able to make money in crisis. This is how it works. Ideally, when there is some tension in a particular country, markets are always tend to react to them. To that particular tension, and the financial analysts, they know this. So they take that opportunity to predict the movement of that particular market. If they know that there is some crisis, they know that the markets are going to go down. So what they do, they predict that the markets are going to go down, all right? When they're right, they make money. This is called active trading. And in active trading, they work with leverage, meaning even if they allocate like 2% of the asset under management towards active trading, they can actually trade more than that because they are doing leverage trading. An example of how leverage trading works is, for example, you wanted to trade, but you had 100 Kenya shillings. And you knew 100 Kenya shillings won't do you much. Like a trade of 100 Kenya shillings, it's very easy for you to lose that 100 Kenya shillings. So with leverage trading, you can take a trade worth 1,000 Kenya shillings. So this is what Mansa X does when it comes to active trading and leverage trading. So they're able to make trades that are more than what they have or they have allocated for them to make more money for you. So what is important here is to have very good analysts to determine or predict the market the right way, or to predict how the markets are going to move. The other thing that is very important for you to note here is that the asset that takes up the biggest allocation is the fixed income. These are usually government securities, bonds, euro bonds, and treasuries. And these are international. We are talking about international markets. And I think I will do another video suggested by one of us for me to compare the returns of this fund and if you invested directly to some of these top holdings, we see what you would be making or if you would make more. And I would love to do that video because I have seen so many people complaining about the fees while others say that it is better to invest directly in the stock market. And I will do that video for us to just compare how much you would make in Mansa X as opposed to investing directly into their top holdings. Okay, so we'll do a comparison video. We see which would have made more. So make sure that you subscribe so that you don't miss out on that. The other reason why this fund is able to make money during crisis or when the markets are not doing very well is the fact that they are not limited to a certain asset class. The fact that they can invest in different asset classes, in different regions or in different geographical locations, it makes it possible for them to move to other areas when one area is not doing well. For example, if there is political tension in US, they can move to another area or to another country for them to make better returns than what they would get if they invested in US. If Kenya is not doing well, they can move the investment to another country, maybe an African country. And I mean, these are professionals. They have access to information that we don't have. So they're able to analyze the market and be able to tell whether there is something that is going to affect the market. The next question I want us to cover is, can you lose money in Mansa X? And the answer is yes, but in very rare occasions. Mansa X does not guarantee capital preservation, as we have mentioned. But if something happened to the fund manager, if the company went out of business, although the fund is regulated by Capital Market Authority, you would still lose a portion of your capital, the amount that is not invested in government securities, or the amount that is invested in securities that are risky or in assets that are risky, you would lose that part of the investment. Because in rare occasion, if something happened to this organization, it would mean that the CMA would order liquidation of the investment. And since Mansa X is investing in risky assets, liquidation in the wrong time would mean negative returns or losses in your capital. So yes, you can lose money in Mansa X, but in very rare occasion, if something happened to the organization or the team is not doing what it's supposed to do, or they invest in areas that are not making money, you can actually report a negative return. But so long as they have a good team, so long as the company is still intact and their financials are still good, then it means that you'll be making money in these investments. Now, for the fund features, here is a table showing the minimum amount required for you to invest, the fund manager, the minimum amount for top-ups, and note that the fund is tax exempt for now and it compounds on a monthly basis, meaning if you invested 250,000 Kenya shillings in Q1, and in that Q1 they made you 10,000 Kenya shillings, and in Q2 they did a 5%, now in Q2 your returns will be calculated with 260,000 Kenya shillings. So it will be 5% of 260K instead of 5% of 250,000. So long as you're not withdrawing the interest earned from your investment, it means that they are going to be making money with whatever you earned from the previous quarter. All right, as we conclude the video, let me know in the comment section, are you an investor or are you planning to invest? If you're planning to invest, reach out to me through this number. I will connect you with a Mansa X relationship manager who will guide you through the process of creating an account and also investing. And I'm happy to say that I'm a happy investor, and so far so good. If you're looking to diversify to other funds or to other fund managers, you can also consider Avocap. Here is a video for you. Happy investing, and thank you so much for watching and for your support. See you in our next video. Bye.